Good morning, good afternoon, good evening. It's Tyler, the founder of Merlin Finance. Today I want to talk to you about legging into a stock. What does it mean to leg into a stock? Well, it means to buy a certain amount of stock over time. So let's say you have $1,000. You don't want to buy all of the stocks that you want to own for whatever company at one time. What you really want to do is buy about $250 at one point, $250 at another point, $250 again later, and $250 again after that. The reason why you do that is because it gives you an opportunity to get a better price for the amount of stock that you want to buy. So I want to show you how I am legging into Amazon for a client right now. So I have received a set amount of money, a lump sum of capital, of cash, that I am to invest in Amazon stock at the preference of the client. So here's what I'm looking at. This is a chart that shows Amazon stock from 2021 in June until today. So as you can see, 2021 was a great year. We had a high of 185 in this time period and a low of 103. So the peak of the market was in January of 2022, and since then we've gone down. Now we do see some peaks and troughs here, but we're just going to ignore that because it's been straight down since then. Okay, so if you're familiar with Amazon stock, they had a stock split. It was a 20-to-1 stock split on 6/6/22. So after that stock split, it pretty much went straight down. So that worked in my favor, and it worked in the favor of the client because I received the money about not too long after the stock split. I made a post and they were interested, so they gave me the money and said, hey, can you buy Amazon stock? I said, yes, I can. So at that point, it was about 125, 123. It crashed down to a low of about 102, and I made my first purchase at about 103. After I made my purchase, the stock went on a run, and it was really running, and I was getting concerned because I thought it was going to go back up to the original stock split price. But at the time I didn't know, so I bought it at about 114 on the day. And I actually ended up averaging up, which is what you want to try not to do. In my view, that was really the prudent thing to do. It was about 10% higher than the original purchase price that I had, but what I didn't want was it to go back up to the original stock split price, because at that time, this was the level of resistance, and the stock was, at that point, probabilistically likely to go back up to that level of resistance, but it didn't. It went up to 116, came back down, so 114 really wasn't that bad. Today the stock is down at about 110 on the day. The rest of the market is kind of up right now, so Amazon is showing weakness, and I foresee that the stock is probably going to go back down to about 103, 104, this level of support right here, and possibly break down further, especially as we have rate hikes from the Federal Reserve and recession fears really start to solidify. In my view, we're already in a recession. Consumers can see it, in the workplace you can see it, business is slowing down, oil prices are coming back down, there might be some level of demand destruction. That's all macroeconomic effects that factor into my calculation, my calculus, that Amazon stock is going to come back down and I'll be able to get a better price. So I bought here, and I bought again here, and I want to try and buy again lower than this original level here for the last of the capital that I have for the client. About $100 or less than $100 would be ideal for me, but I'm just going to have to play it by ear. Okay, so let's take a look and see what kind of stats we see for Amazon. We're going to ask Merlin what he thinks. And that's going to help me make a decision. So what I would like to see is I would like to see the moving averages be red, all three of them red. So let's see where we're at. Okay, all three of them are red. So that means that the stock price is under pressure and that the stock price is likely to go down. If you want to see the reasons why for that, just check the user's guide. Okay, past returns, I don't really care. Now price predictions, this is just going to be for tomorrow. Let's see, so current price, yep, Okay, it's been down 2 days in a row. Analyst 1 year price target's 173, so I'm actually good for that because I'm way below that. Obviously they say buy 51. It's a coin toss if it's going to go up tomorrow. So tomorrow might not, well, it's a coin toss, so it could be down tomorrow, it could be up tomorrow. Merlin really doesn't know. But I'm not looking to squeeze 113, 112, 109, 108. I'm really looking for the 101, $99 range down here. So -9 or -10%. And that's not even a factor in Merlin yet, because it's not really seen to be like as a possibility quite yet, to be down 9 or 10% tomorrow. Okay, so yeah, that's what I'm hoping for. That's how you do it. You don't want to buy all of your stocks at one time. You want to buy them over time at better and better prices. Sometimes it works out like that, sometimes it doesn't, but you want to make sure that you don't screw yourself and buy like all of your stocks right here, or all of your stocks right here, or even all of your stocks right here, because you don't even know if it's going to go down further than that. You're going to get a better price. So okay, it's all about being patient, it's all about being thoughtful, it's all about being prudent, and it's all about making money and not losing money. Okay, so good luck to you on your trades.